Yesterday I hit this trade, one of my best trades I've ever taken, so I figured why not do a trade breakdown, as to be fair, quite a lot went into this trade. And just to get it straight out of the way, this was an 8.5 risk reward trade, and right here you can see my executions for that trade, one mini going short at 417 and then taking off at 400. And over here you can see the trade that I took on stream, the executions there. And by the way, I do stream most days for the AM session, start at about 9:15 and I hang around until I am done with the session basically. So feel free to subscribe so you don't miss those streams because they are good. And for complete transparency's sake, this was taken on a Bullinox eval, which I'm currently in the process of trying to pass. And if you do think about using Bullinox during any point in this video, then use my code KAI to get you the best discount on end of day accounts. And in the description there'll be a video to a link about Bullinox. Anyway, on the AM session of this day, I wasn't really able to catch much. I did try and catch a short, but like you saw, it got stopped at break even. So I did have a little peek at the PM session, and just for reference, my target for the day was these lows down here. I'll find a clip of me talking about these lows on stream here and put it up now so you can see that. I am aware that ES looks pretty solidly bearish. To me at least. Especially on the hourly. High time frame absolutely looks bearish. ES. Not like outrageously bearish, just short term. At least to me. This looks like we'll get a continuation lower on ES. We could not. We could just zoom higher, and in which case I probably just won't get an entry, which is fine. But the basic premise for this trade was that we'd had a downwards AM session and then a small retracement during the lunch hour. We swept that lunch liquidity and ran into a very specific level, which I will show you in a minute, and then displaced lower into this sell side liquidity. Now that important level that I just mentioned is this fair value gap here, which is Monday's PM first presented fair value gap. I do have a video going over the first presented fair value gap, but I have not gone into any detail about the PM fair value gap or the little rules that you need to know about if you're going to be using them, but I will have a video going over that soon, so don't worry. But if I label this as Monday's PM first presented fair value gap, and then we scroll back to that Tuesday PM session, you can see that we ran above those lunch stops and we ran straight into that PM first presented fair value gap from Monday. Now, that was the first inkling for me that we were potentially continuing downwards for the rest of that PM session. The second inkling was something that I don't use a lot, but I do use, and I use it in time-specific scenarios, and that is SMT. Now, a lot of people use SMT everywhere. I don't. I use them for very specific times, and the specific time that I was looking at for this trade was 1:30. So you can see around 1:30, we're going to make a significant SMT, and if I just pull Nasdaq across, you can see that these three highs here on ES all went down, and these three highs over on NQ all went up. So that is not something by any means that is going to make or break the trade, but it is certainly a nice confluence, and also tells me that ES, in this case, is likely to be the one that is going to be moving lower faster because it's being compressed like a spring. So we have three reasons to take this short. We have the first presented fair value gap, we have an SMT, and we have the draw of relative equal lows. And we had also come into a premium from this high to this low. I'm using this high because it took out swing highs on the 1 minute chart, so this is what is known as a dealing range. And obviously then I drag it to the low, and you can see we came just above the equilibrium there, so we are now in a premium, and we're reacting off of all these levels. That is the fourth confluence. And then the fifth confluence, and kind of a sixth at the same time, is obviously we have my 2022 model, my bread and butter setup, and it is forming at a time when it is expected to form, right? At 1:30, you can expect a 2022 to possibly present itself. So this candle wicked up into this, and I was kind of just watching this, having a peek, and then this candle shot up into this fair value gap and displaced away. And that was my signal to be like, right, I need to be in the short because this thing looks like it is about to take off. So I measured this wick, and I got in right at the midpoint of this wick, which you can see is 417. If I got in at the fair value gap, I'd have got one tick better of an entry, but that's okay with me because I then zoomed into profit into this trade. Now, I could have taken my profit off here, and honestly, that would have been the smart thing to do because that means I wouldn't have had to sit through all this consolidation, but I was very, very confident in this sell side liquidity getting taken. So what I did was when we ran into profit like this, I moved my stop to break even, and did trail it slightly, but not aggressive at all because I wanted to make sure I was part of the move. But I just submitted to time, and then about 2 hours after my entry, we got the take profit. So it was a very, very solid trade. I managed it very well. I stayed in it, which was the other important thing, and all of those together ended up paying off a nice little trade on the eval. And then as you can see, that draw on liquidity that I had was then the low of the day, so not a bad trade at all in my opinion. Now that's going to be it for the video. I hope you enjoyed and learned something. I just wanted to get that little trade breakdown done because I was very, very happy with that trade. But like I said, I've been streaming a lot recently, so make sure you're subscribed so you don't miss those streams. And yeah, that is going to be all from me in this video, boys. I hope you enjoyed and you learned something. And if you are trading this week, then good luck, good trading. Catch you later, boys.